Hi, my name's Jane Stout. I'm a professor in botany at Trinity College Dublin, and I'm going to give you a brief introduction to the natural capital approach and natural capital accounting. So what is the natural capital approach? I suppose the first thing to say is the natural capital concept is not a new concept, but it's just a new language to link nature with the economy. It's a bridging concept. And the concept borrows language from economics and business to illustrate the economic and societal impacts and dependencies that we have on nature. And the reason for using this language is to bring nature into the political and economic arena where it's been massively neglected in the past, not valued, and therefore damaged. So nature is all of our natural resources, including biodiversity, living organisms, rocks, soil, rain, sun. All of this nature can be considered an asset or a stock, and this is what our natural capital is. And together, all of these stocks of assets, the soil, the nutrients, the sun and the rain, they allow the production of biomass, so the growth of crops or trees or grass, which result in marketable goods and economic activity. So we get flows of goods and services from stocks of nature. And the natural capital concept rests on this economic idea of stocks and flows. But it's not all about producing marketable goods. Other benefits like the regulation of water flow, like landscapes, recreation, all of these things can also be brought into the equation when we're talking about value, and also do have some direct and indirect impacts on economic activity. So the natural capital approach and the natural capital concept is all about this idea of nature and our natural capital stocks or assets, enabling this flow of goods and services and linking nature with the economy. And we quite often talk about the flows from nature that have a benefit to humanity as ecosystem services. So from our natural capital stocks, or our ecosystem assets, as they're sometimes called, we get this flow of ecosystem services. So for example, in terms of habitats for beneficial organisms, carbon storage, water regulation, or for maintaining biodiversity. And the important thing about this concept is that without the stocks of natural capital, the flows cease to occur. So the stocks, the natural capital assets, nature underpins the whole thing. And traditionally, when we talk about valuing nature, we just value the benefits that we get out of one end, but we need to recognize the value of the stocks and maintain and enhance those assets to ensure a flow of benefits. So how can we do this? And we often, when people talk about natural capital approach, they often think about monetization, but really an important point to make here is that natural capital approach is not about putting a price on nature. It's about recognizing and valuing nature. And valuing nature doesn't have to include monetary values. Now, pricing and value might sound like the same thing, but it's not quite. The value implies the worth of a good or a service for an individual, whereas the price is the amount of money that somebody a payer would give to a seller in exchange for product or service. And prices can be arbitrary, they can be context specific. Value, of course, is inherently anthropocentric and subjective. And each person may be prepared to pay a different amount. So it's very hard, sometimes impossible, to put a true financial value on ecosystems. So natural capital approach is not all about putting a price on nature, and natural capital accounting is also not about putting a price on nature. It's not all about tracking financial values. It's about quantifying stocks of natural assets, these flows of ecosystem services, and doing that in a standardized accounting framework. And ultimately, this allows changes in natural capital, stocks and flows of ecosystem services to be tracked over time, to be integrated into accounting and reporting systems at a variety of scales. So we're familiar with the system of national accounts and metrics like GDP to measure produced capital, things like population data and censuses, to measure human capital. But until recently, there hasn't been a way to monitor and track the state of our natural capital. And often, if it's not measured, it's not well managed. So one way of doing this natural capital accounting is using the UN-approved SEA ecosystem accounting. So SEA is the System for Environmental Economic Accounting, and ecosystem accounting enables the formation of a range of different accounts. So we can have extent accounts that show the amount of different natural capital stocks or ecosystem assets in a given spatial area. condition accounts that show the quality of these stocks or assets in relation to a reference condition. And the condition of the asset then is related to its ability to provide a flow of ecosystem services. And we can create ecosystem service accounts. So those ecosystem services that contribute to a benefit used by the economy and people. And these first three accounts can be reported in biophysical terms. So, for example, the area of assets in hectares, or the quality of an asset on a ranked scale, or the amount of timber produced in tons. But we can also create monetary accounts. So even though natural capital accounting isn't all about financial values, we can create monetary accounts. And the role of monetary accounts is to place a monetary value on ecosystem condition and services, which is difficult, but we know that the contribution of ecosystem services or lack of ecosystem service has a direct economic cost, which can be estimated in monetary terms. So we can create these financial accounts, these monetary accounts. They may not be complete, they may not include everything, but they can be a useful part of the process. So this ecosystem accounting approach is a spatially explicit approach. It's being used at country level through national statistics offices. And what we mean when we say it's a spatial approach is that we can create maps of assets, their conditions, and the flows of services. So what happens is the models start with identifying an ecosystem asset. So for example, in this case, a forest that can be measured by its extent, so its area in hectares. And this forest asset can further be described in terms of its condition through indicators that reflect its overall quality, for example, soil depth. The biomass in this forest collects and filters rainfall before it reaches streams and rivers, and this provides the important ecosystem service of water filtration and water regulation. And the benefits generated by the filtration service take the form of cleaner water in terms of reduced treatment costs. And these benefits accrue to the people in the economy, including businesses and households that produce elements of well-being that can be measured using quantitative techniques. So that's basically what natural capital accounting is and what the accounting framework is. And these accounts can be created at a variety of scales. Mostly to date, they've been used at national scales or regional scales, and we're testing if we can downscale this method to site scale and use them to track and assess impacts of changes in assets, to inform planning for management of assets, to demonstrate the economic importance of assets, not just in financial terms, but in wider terms as well, and also to monitor progress towards environmental goals. So if you want any more information at international, national, or project level, please check out these links. Thank you.